You know the sounds, the roar of the crowd, the crack of a perfectly landed strike in the octagon. Then there's the pyrotechnics, the larger-than-life entrances, and all the drama inside the squared circle. That is the world of UFC and WWE, two absolute titans of sports and entertainment. And since 2023, they've been fighting under one banner, TKO Group Holdings. But behind all that spectacle is a brand new financial powerhouse, and we're about to give it a full financial checkup. Right, we all see the champions and the sold-out arenas, but how does this global empire actually make its money? What's the real financial health of this entertainment juggernaut? Well, to find out, we're going straight to the source. We're not guessing here, not speculating. We are cracking open the company's own report card, its official third-quarter financial filing for 2025. This document, the Form 10-Q, gives us a totally unfiltered look under the hood of the TKO money machine. So let's open up the books and see what they tell us. First up, let's just get a handle on who we're even talking about. Who is TKO, really? And how in the world did this super company even come to be? Now, what's really wild about this is just how fast all of this happened. In September 2023, the groundbreaking merger of UFC and WWE creates TKO. Boom. Just over a year later, in February 2025, they make another massive move, scooping up more assets. And then, just 1 month after that, a deal is done that makes the private equity firm Silver Lake the ultimate power behind the throne. This means the future of these iconic brands is now in the hands of a major financial player, which has huge implications for their strategy. All right, now that we know who they are, let's check the company's pulse. How much money is actually flowing in, and more importantly, are they profitable? Okay, looking at the first 9 months of the year, we see two pretty fascinating numbers. Revenue is down just a little bit, from nearly $4 billion to $3.7 billion. But here's the real headline: net income. They've swung from a $21 million loss in 2024 to a nearly $200 million profit in 2025. What that tells us is that they've figured out how to make more money with slightly less, a sign of a company getting leaner and, well, meaner. That profitability is impressive, for sure. But to really understand the business, we need to know what's driving that $3.7 billion in revenue. What are the key pillars of their income? And this chart, wow, it illustrates their business model perfectly. Forget t-shirts and ticket sales for a second. As you can see, the undisputed champion here is media rights and content, making up over half of all their revenue. That's the cash from broadcast deals with networks like ESPN and all those streaming services. Live events are a strong number two, but it's crystal clear that selling the right to broadcast their content is the financial engine of TKO. So we saw that TKO became profitable, but they didn't just sit back and count their cash. Oh no, they went shopping. Big time. You see, the company clearly has ambitions that go way beyond just fighting and wrestling. They're not just content with owning the ring and the octagon. It seems like they want to own the entire live event experience. This whole acquisition was a strategic play to control more and more pieces of the sports and entertainment world. And they put a massive price tag on that ambition, $3.25 billion. To put that in perspective, that's more than the entire economy of some small countries. So what on earth did they get for all that cash? They bought some serious players. IMG is a giant in sports and talent management. On Location is a leader in high-end VIP experiences for major events. And they even picked up the PBR, Professional Bull Riders. This means the next time you go to a major sporting event or a concert, there's a really good chance TKO is involved somehow, from managing the talent to providing that VIP experience. But a shopping spree like that? Well, it doesn't come for free. To understand the true cost of this expansion, we need to take a kind of financial X-ray and look at their balance sheet, what they own versus what they owe. Okay, here's the simple version. On one side, TKO has a mountain of assets. We're talking cash, buildings, the value of the UFC and WWE brands, totaling a massive $15.5 billion. But on the other side of the ledger, they have liabilities, what they owe, of $6.1 billion. And one of those liabilities really stands out. $3.7 billion. That is the single biggest IOU on their list. It's their long-term debt. And let me tell you, that number has been growing. Just look at this jump. In only 9 months, TKO's long-term debt ballooned by a full $1 billion, going from $2.7 to $3.7 billion.
A huge reason for this, the report shows they took on another $1 billion loan in September 2025, which helped finance that aggressive growth. Now, borrowing like this is pretty common for a company in beast mode, but it also puts a ton of pressure on them to make these new acquisitions pay off, and fast.
So we've got a profitable, fast-growing company that's also taking on a lot of debt. What could possibly go wrong? For our final check, let's look at the risks the company itself tells its investors to watch out for.
Every financial report like this has a section that basically says, hey, we're optimistic, but here's what keeps us up at night. This isn't some media spin, this is the company's legally required list of potential problems on the horizon.
And these risks make total sense given everything we've just seen. They're heavily dependent on those big media deals we talked about. They worry about fans' taste changing, or if they can successfully merge all these new companies they just bought. So here's the paradox. The very things that make TKOs so powerful, their massive media deals and their aggressive acquisitions, are also their biggest vulnerabilities.
So what's the final diagnosis from our checkup? TKO's an undisputed heavyweight champion. It's powerful, it's making a profit, and it's growing at an incredible pace. But it's carrying some equally heavyweight debt on its shoulders, a direct result of its win-at-all-costs strategy.
They've built a financial titan, no doubt, but by fueling its growth with billions in debt, they've also created a high-wire act. The big question is, can they balance this risk and reward to deliver the ultimate financial knockout for their investors? The next few rounds are going to be absolutely crucial to watch.